The information contained in this podcast is an expression of opinion and does not constitute investment advice. This is the Gold Money Podcast with Alistair McLeod, keeping you up to date with expert opinion on precious metals and the markets.
Hello, this is Alistair McLeod on behalf of Gold Money, and with me on the line from Madrid, I have Félix Moreno de la Cova, who is one of our contributing authors. Félix studied law and economics in Madrid and now, I think, trades part-time, whole-time, whatever. Anyway, he's very, very much involved with markets. And I think that it's a good time to talk to him because the Spanish government appear to be not meeting their deficit target. So it could be that Spain gets a bit more into the headlines. And it's a good time, I think, to just see how the situation is in Spain. Welcome to the podcast, Félix.
Very, very pleased to be here. Thank you very much, Alistair.
No, it's very much my pleasure. This business of deficit targets, I mean, this is hardly a surprise, is it? As I understand it, there's no way they can meet deficit targets because apart from anything else, austerity is sort of destroying the tax base.
I'm sorry, I have to disagree very strongly, Alistair. It was actually very, very, the target they proposed was actually very mild and they could have very easily met it. There's just no will to do so. And obviously they misjudged the situation and underestimated how much, especially the tax increases, were going to hurt the tax base, as you say. But you know, Spain is in economic vicious circle, but the target, you know, even within the recession, even with the dropping tax base, even with growing unemployment, the target was so mild, they could have actually met it easily if they have done one thing and one thing only, not build out the banks.
Right. Well, now that's a good question. Well, firstly, I would like to offer my opinion on Mr. Rajoy. I mean, he had a golden opportunity with a landslide virtually. What was it? It was, 18 months ago. And, you know, I mean, that's the time when you say, we got a problem, we've got to fix this. I've got the government, the mandate to do it. It's going to be painful, but I'm going to take the necessary action. He didn't. Coming back to your point, essentially, from that moment, he exposed the fact that he was a weak leader. So, I mean, would you agree with it that is really the political problem behind this?
Exactly. There's even something that makes it even more annoying or more irritating is the fact that he's actually been in the government that has done something very similar before. Because in 1996, when his predecessor as president of the Popular Party, the PP, first got into government, they had to cut the deficit very, very harshly to meet Maastricht criteria and to be able to join the euro. And they did it. They had to take some very tough decisions, but they managed to do it. And Rajoy had that example to illustrate him, and he simply chose not to follow it.
Yeah, okay. I think that point's well made. Now, you mentioned the banks. He would have achieved this really, you described it as a pretty mild target if they hadn't rescued the banks. But if he hadn't rescued the banks, I mean, wouldn't that have led to a banking crisis Europe-wide? No,
not at all. That's just such a bugaboo. There's obviously you do have to assure depositors that the deposits are safe, but that's only a very small part of it. It would have led to a bond crisis, obviously, because bank bondholders would have lost almost everything. Which, by the way, is what has happened with the savings banks, with the Spanish cajas, and they've allowed that to happen. And many people have complained, and many people have lost money. But apparently, those people are less important than the ones who own the bonds of the banks that have been rescued.
I think I'm right in saying that they've pretty well been wiped out, haven't they? Because they had to exchange their deposits for equity, and of course the equity has just gone up the swanny. Is that right?
Exactly, and also there's been nary a tear shed for the shareholders of Bankia, who bought their shares almost a year ago and have lost 95% of the value by now.
Yeah, worthless.
and there's been no trouble letting all these people suffer, as they. It's hard to say this, but because many of them were defrauded or at least misled about what was going to happen, and the investors take a risk inevitably, and capitalism is about profit and loss.
Yeah, I agree with you entirely on that. But I've got this sort of feeling that, putting the cajas aside, or bankia as it now is, or as I understand it is, if you're looking at the other banks, Spain is sort of quite unusual because you've got these big banks like Santander, BBVA, who, I understand have been pretty well capitalized, mind you, in a fractional reserve banking situation. Capital gets wiped out pretty quickly. So whether you got 10% or 5% becomes a bit immaterial. But I mean, the banks are sort of pretty well capitalized. If they hadn't messed up the bankier situation, I think what you're suggesting is that the BBVAs and the Santanders would actually have managed to not require to be rescued.
They probably. What I'm trying to say is that there's been this whole discussion about the alternative to the bailout, which was the bail-in, which, as you know, was an internal recapitalization. So it wouldn't have been free, but the taxpayers wouldn't have had to pay for it. That's what I'm trying to say.
Right.
The way an internal recapitalization works, and this has been done many times by many banks all over the world. In fact, I think some German banks had to do it, is you give the bondholders equity. You exchange debt for equity.
Yeah.
And in fact, because they are internationally diversified, the big Spanish banks, it wouldn't have been such a large percentage of the bonds. They've actually done something similar with the preferred bonds. But I'm talking about the senior bonds, the proper bank debt.
Yeah.
However, the people who hold those bonds are not the kind of people you want to mess with, and they've had enough clout to make sure that they didn't have to pay for the losses. But no, I'm pretty sure that the big Spanish banks would have survived. They just, they would have had to take a hit for the big losses in real estate that they've, it wouldn't have been the end of the world. It wouldn't.
Right. Do you think that Rajoy came under pressure from, perhaps these, the banking sector, let's say, in the broader sense in Spain, and also the ECB, and perhaps the Bank of Spain itself to sort of keep the show on the road? I mean, do you think that's where this policy came from, or?
Well, I don't really want to speculate too much on his motivations. I like to look at facts, and the fact is that all the government had to do to keep the markets happy and to keep the debt markets open for Spain. The very, very minimum they had to do was make a commitment and keep it. And they fought very hard to make sure that their deficit target was, very easy to meet. That's famous 6.3% of GDP. And they promised, it was absolutely set in stone. They promised they're going to meet it. And then they didn't. Yeah. They weren't even close. In fact, if you include the bailout, the actual 2012 deficit was probably 10.2%. And that is what the international media, Bloomberg and Reuters and all these people are reporting. Obviously, the national media, something which is a bit embarrassing, I have to say, is mostly reporting the figure that's closer to 7%, because, the government wouldn't be very happy by being so much off target. But, they just don't include the banking bailout, which obviously they should. Any accounting principles. Anyway, all they had to do to keep the markets relatively happy was to make a target and stick to it. In my opinion, that would have kept the markets relatively happy. But if they wanted to show real good faith in meeting the debt obligations, what they should have done is reduce the deficit substantially and promise to balance the budget within 2 or 3 years, and then make sure that the first year that the budget balancing work was front loaded, that the first year they made some substantial move. And in my opinion, that that time really, really works against the Spanish government. They had time is running out. Spain's total debt burden, depending on what you include in it. I mean, if you use the government's official figures, it's probably going to be 80% or such like in 2012, by the end of 2012, when the numbers come out. But if you use other figures and you include local debt, guarantees, public companies and so on, it's probably over 100% by now. Now, Spain hasn't seen deficits of over 100% in more than 100 years.
Yeah, well, I suppose in a sense, I mean, one sort of, if you like, backhanded benefit of all those years of fascism was nobody would lend Spain any money. So
but
it's a new phenomenon. I mean, this is the thing, isn't it? This is your point.
That's my point. I mean, it's not completely unprecedented, but every time that we've seen it before, we've seen a sovereign debt crisis, and we've seen some kind of devaluation, debt restructuring, basically some kind of default. Yeah. And obviously, what is unprecedented is seeing a default within the European Union. And this is the reason why Spain is important, and why I felt that your listeners should know about the Spanish situation in more detail, because it's not just about Spain. Obviously, those of us who live here care about it, but Spain is what will determine the future of the euro, more than Italy, more than France, more than Greece or Portugal or Ireland. I feel it's just big enough. It's the biggest one of the periphery countries. Well, not bigger than Italy, but Italy's a special case for reasons that we may talk about later. Spain is the fourth economy by GDP within the eurozone, the fifth within the European Union, and it's large enough not to be easily bailed out. I mean, yeah. The bailout we've just seen was pocket change compared to what a bailout of Spain would really entail. And then we get to the key question: what will the EU do when the crisis, which is becoming increasingly more probable, when the real crisis comes? Who's going to pay for it? It's a very simple question. Who's going to pay for it?
Absolutely.
Is it going to be the German taxpayers, or is it going to be the European Central Bank, and indirectly the German taxpayers? So.
Well, I mean, I take the point, Felix, but it is not just Spain. I mean, I think what you're saying is that the pressure is coming on, as far as you can see, more rapidly in Spain than in, say, Italy and France.
I'm very worried about France, and I'm very worried about Italy, and we have the Italian elections now.
As we speak, yeah.
As we speak. But I think the crisis will come to Spain first for two reasons. I mean, not that it will come to Spain first, it's already here. But, that Spain will force Europe's hand and will force them to make a choice about whether to rescue, to allow default, or to really start the money printing up. And the reason that I think Spain will force Europe's hand first is, one, because we really haven't had a history of dealing with high debt, sovereign debt, in over 100 years, unlike Italy, unlike other countries in the European Union. Secondly, Italy has gold.
Right.
and thirdly, France has such strong political clout. Germany really, the option of letting France go and kicking it out of the European Union is a nuclear option.
It's not on, is it?
But it really breaks the whole thing apart. But Spain is the periphery, is a Latin country. It's, I know for a fact that European high officials in Europe don't even contemplate it, but people in Germany do.
No, exactly.
And when push comes to shove, it will be on the table.
Yeah. Well, interestingly, some time ago, I interviewed Philip Bagus, and his view was that the eurozone was costing Germany, or ultimately might cost Germany, around about 4 trillion euros, which is more than their GDP. So I think your point is well made. So I think in summary, you reckon that Spain, for various reasons, is going to be the first of the big crises that's going to hit the eurozone. Look, one of the things that we hear from time to time, I mean, I think it must be terrible to have, what is it, over 50% unemployment for the youth? I mean, it's a pretty hopeless situation outside the sort of the main centres like Madrid, I would think, isn't it? This is very difficult. And then you've got the crises in the regions, with electricity bills not being paid and all the rest of it. And this is by local government. I mean, it must be. Is the situation disintegrating rapidly, or
Alistair, you haven't seen anything yet. This is an appetizer. Really, if you look at the Spanish spending and if you look at the Spanish fiscal situation, how it has evolved, very, very few. I know all the headlines around the cuts and the protests, but that's very misleading. There's been very few cuts. There's been very few real cuts.
Yes.
Those cuts will come. The government has no choice. And then those protests and demonstrations you're seeing on the streets almost every day will look like nothing.
Yeah.
I mean, Spanish unemployment insurance is being extended. Many people, those 6 million unemployed, are all perceiving some kind of government subsidy, and that's obviously costing the taxpayer a lot. That's all being financed by debt. When the debt markets start to close, and they will, when Spanish government, when it becomes even more obvious that Spanish government won't be able to meet its obligations, then we're going to see real trouble. I mean, all you have to do is go to Barajas Airport today. There's a huge strike. Why? Because British Airways, together with Iberia, are going to cut almost 1/3 of the workforce of Iberia. Well, that's been in the works for a long time. There's been lots of negotiations, but now they're doing it, and the strike is huge. Well, imagine if something like that was even, a potential in the Spanish administration.
I think that's a very good point. I mean, we all focus on the financial effects and all the rest of it, but the underlying political consequences are perhaps going to be the story for 2013. I mean, we've seen it develop in Greece, where the situation really is appalling for people in the private sector, and that you've got a very, very big taste of just looking at the statistics. So, I mean, two years ago it was the Arab Spring. I mean, is it going to be the eurozone spring? Do you think in that sense? I mean, it's
I don't know, but I know
political instability.
Social unrest that we're seeing so far is only the beginning. But I want to end on a positive note. I'd like to say that all of this is solvable. In fact, the government is doing going about everything the wrong way. But there's a very mainstream paper by some Harvard economists called Alesina and Favero. It's called "The Output Effect of Fiscal Consolidations," and they look at over 160 debt crises, and in which the government had to reduce the deficit, fiscal consolidation, and so on. And they look at the difference it made, whether they cut spending or raised taxes.
Right.
And you know what? Almost every single one of those crises in which the deficit targets were met and the deficit was reduced by cutting government spending instead of raising taxes, almost all of those lasted less than a year.
That is interesting, yes.
So a year and a half, compared to an average of 5 to 8 years when taxes were raised and spending was not cut.
Yeah.
So it is possible to get out of this, and I think the government has a last chance. I don't think that they're going to take it. I do think that the government still has a last chance. We're still 3 years away from the next elections. They could still pull us out of this. So just to be positive about this, they have a chance.
Yeah, but will they take it? I mean, it's the same. You know, it's the same everywhere because governments, I think, instinctively want to protect their own fiefdom, and so they tend to raise taxes. Their economists tell them that because government is so large in GDP terms, that if you cut government spending, you cut GDP, and all this sort of very, very bad economic thinking. We see everywhere there are no governments prepared actually to grasp the nettle. So I hope you're right. But if you are right, then Spain, I think, could well lead the way. So we'll keep our fingers crossed on that. Felix, while I've got you on, you, as one of our contributing authors, you write quite a lot on precious metals in particular. And there's a lot of turbulence going on at the moment with the price of gold and silver being hit quite badly in the futures markets. What's your view of the current situation?
Well, as you know how dangerous it is to make predictions.
Yes,
I'm very wary of that. But I do see the fundamentals of gold couldn't be stronger. The Chinese are buying increasingly. All the emergent central banks are buying. And even some like the German are taking very, very significant measures to secure their gold. So I think that, and at the same time, one of the most important to me fundamental the gold market, interest rates, are still negative in I think 38 of the world's major economies.
Yes, I think that's a very, very good point. I mean, the cost of owning it. It's not just the cost of owning it. I mean, if you like, the whole of the systemic risk and the rate at which central banks are having to increase the quantity of money means that gold, having consolidated over the last 18 months, has got a lot of catching up to do. Is that how you see it? Or
that's how I see it, and I also see some very, very strong buying at around the 1550, 1550 level. Money comes out to buy every time it goes down that far. So there's very strong support there. And we've just seen it. It's rebounded from 1567, I think it touched, and it's now at 1590 again, heading to 1600. So I'm not never say never. Gold has had a nice long run, and there could be a correction. I mean, some very major gold bugs, even though remaining bullish about gold, or talk about the possibility of a correction. I don't think we're going to see it much lower than here, but I could be wrong.
Yeah,
I'm actually very optimistic in the short run. I think we're seeing new gold highs in different currencies each month. Now it's the East. Now it's Japan's turn. We saw India new gold highs in Indian rupees, a couple of months ago. Now we're seeing it in Japanese yen. And probably 6 months ago we saw it new highs in euros. It's the currency wars mean that different countries are taking turns to make gold go higher.
Yeah.
So I think that it's only a correction if you look at it from a European or US perspective.
Sitting as you do in a finance center in the middle of Spain, how do you see Spanish interest in gold? I mean, is the really wealthy money sort of quietly accumulating, or is this information just not available?
Oh, the information is available. It's still tiny. I mean, private wealth managers in Spain still think in terms of bonds and stocks and little else,
as they do everywhere.
But it's changing slightly, mainly because there was a fiscal amnesty recently in Spain, which meant that a whole lot of money that was in tax havens has been repatriated, and people are looking for alternatives. And
right.
Gold is coming to the forefront. In fact, in a couple of these corruption scandals that we've have recently come to the fore, we have seen gold bars appearing at some of the people's arrested homes. People are taking interest.
Yeah, interesting.
But it's still very much under the radar.
Yeah. Well, Felix, thank you very much indeed. Do you publish anywhere else, or have you got a website?
I do write at a few places, but the only one I'd really like to promote is my Twitter account, which is Flix1, Flix1.
Right. Okay. That is noted, and thank you very much again. And I hope that Rajoy sees the light. Perhaps he might listen to this interview and discover that actually there is a way out of the morass. Anyway, we will pray for that. But thank you very much indeed for joining us.
Thank you very much, Riley.
Subscribe to the Gold Money newsletter at www.goldmoney.com to receive email updates on new articles, videos, and iTunes podcasts from our Gold Research section.